Today I am going to tell you a true story. A story so shocking that many people find it hard to believe after hearing it. It leaves people surprised, disturbed, and deeply worried that such things could happen in the real world. This is a story where wealth, power, and exploitation were deeply connected. A story that challenges what many people believe about justice and influence. For an ordinary person, it may sound impossible, like something from a dark movie or hidden history. But this is not fiction. This is a bitter reality that the world has had to face.
Imagine it is an ordinary day. People are driving to work, children are going to school, and families are planning their future. Then suddenly, in a few seconds, everything changes. A car accident happens on a busy road, an ambulance arrives. A patient is rushed into an emergency room. Doctors begin treatment immediately, but outside, another reality begins, the financial reality. Medical bills start rising, phone calls are made to insurance companies, documents are searched, and hope slowly turns into uncertainty. Every year, millions of people buy insurance believing it is their safety net, their protection against life's unexpected disasters. But when disaster actually happens, does the system truly protect them? Or is insurance simply a financial structure designed to collect money while making payouts difficult? The global insurance industry is worth trillions of dollars and is one of the most powerful financial sectors in the world. Yet despite its size and influence, many ordinary people still feel confused, frustrated, or even betrayed by it. Some people say insurance saved their lives financially. Others say it failed them when they needed it most. So the real question is not simple. Is insurance truly safety, or is it just a system that works best for those who control it? In this investigation, we are not here to promote insurance or attack it. We are here to understand it, to question it, and to uncover how it really works behind the scenes. To understand the truth, we first need to understand what insurance actually is. At its core, insurance is a risk-sharing system where thousands or millions of people pay small amounts of money, called premiums, into a shared pool. When something bad happens to someone in that pool, the company pays compensation from that collected money. In theory, this is a powerful idea. It allows individuals to protect themselves from financial disasters that they could never afford alone. Over time, insurance has grown from a simple protection concept into a massive global financial system connected to banks, investments, and international markets. In countries like the USA, insurance is managed through both public and private systems. One of the biggest and most well-known national insurers is life insurance, which provides life insurance coverage to millions of citizens. At the same time, the entire insurance industry operates under financial regulations designed to protect customers and maintain market stability. Supervised by organizations like the Securities and Exchange Commission. However, regulation does not automatically create trust. Many people still ask difficult questions. Do customers fully understand what they are signing? Are policies written in ways that are too complex for ordinary people? Are companies balancing protection and profit fairly? Around the world, massive insurance markets handle risks worth billions of dollars, including specialized global markets such as Lloyd's of London, which insures everything from ships to satellites. This shows how powerful and essential insurance has become in the modern world. But power also brings responsibility. As we move deeper into this investigation, we will explore both sides the protection insurance can provide, and the controversies that continue to raise serious questions about the system itself. Insurance is built on a simple promise: protection when life goes wrong. Most people, insurance represents security, stability, and peace of mind. From health emergencies to accidents, natural disasters, or death. Insurance is marketed as a shield against financial destruction. Modern life is full of risks. People drive cars every day, work in dangerous environments, travel frequently, and depend on expensive medical systems. Without financial backup, one unexpected event can destroy years of savings. This is where insurance steps in as a safety mechanism. The idea is simple. Many people contribute small amounts of money, so that when a few face losses, they can be compensated. In theory, this creates a powerful social financial safety net. Governments and financial institutions often promote insurance as responsible financial planning. Families are told insurance protects their future. Businesses rely on insurance to survive disasters. Banks often require insurance before approving loans. This shows how deeply insurance is connected to modern economic systems. But while the promise sounds perfect, reality can be more complicated. Some people experience smooth claims and real financial rescue. Others face delays, confusion, or rejection. This creates a deep emotional divide. For some, insurance is a hero. For others, it is a system they don't fully trust. Understanding this promise is important because it explains why the insurance industry has grown so large. It is not only selling a product, it is selling peace of mind. But peace of mind depends on trust. Trust depends on transparency, fairness, and understanding. The question is not only whether insurance works. The deeper question is whether people truly understand what they are buying when they purchase protection. At its core, insurance is a risk-sharing financial model. When someone buys insurance, they pay a regular amount called a premium. That money goes into a large pool, along with premiums from thousands or millions of other customers. Insurance companies then invest this pool into different financial markets to grow the money. When a customer faces a covered loss, the company pays compensation from this pool. The system depends heavily on mathematics, statistics, and risk prediction. Companies calculate how likely an event is to happen and price policies accordingly. Younger, healthier, or lower-risk individuals often pay less. Higher-risk individuals pay more. This system is designed to remain profitable while still paying claims. Globally, large risk markets help distribute massive financial dangers. For example, major global risk-sharing models exist in places like Lloyd's of London, where complex and high-valued risks are insured through multiple investors. In countries like USA, large public insurance providers, such as Life Insurance Corporation, provide coverage to millions of citizens, especially in life insurance sectors. Meanwhile, financial safety and fairness rules are supervised by regulators like Securities and Exchange Commission, which aim to protect customers and ensure companies remain stable. On paper, this system is highly organized and scientifically designed. However, complexity can also create confusion. Insurance policies often contain detailed legal language. Customers sometimes sign policies without fully understanding coverage limits, exclusions, or conditions. This gap between system design and customer understanding is one of the biggest reasons insurance remains controversial despite being financially essential in modern society. There are many real situations where insurance works exactly as promised. For families facing medical emergencies, insurance can mean the difference between treatment and financial collapse. Cancer treatments, surgeries, and long-term hospital stays can cost more than most families earn in years. When insurance covers these costs, it can protect not only health, but also future financial stability. In many cases, insurance payouts help families continue their children's education, maintain housing, and avoid long-term debt. Life insurance can be especially powerful in situations where the main earning member of a family passes away unexpectedly. Without financial backup, families can lose homes, businesses, and future opportunities. Insurance can provide immediate financial support, allowing families time to recover emotionally and financially. Businesses also benefit heavily from insurance. Fire damage, theft, natural disasters, or lawsuits can destroy companies overnight. Insurance allows businesses to recover faster and continue providing jobs. In some countries, insurance is deeply integrated into national economic systems. For example, large infrastructure projects, airlines, shipping companies, and construction firms cannot operate without strong insurance backing. Even small businesses rely on it to survive unexpected events. These success stories are important because they show insurance is not purely negative. In fact, many economies would struggle without it. However, positive stories are often less visible than negative ones. People rarely talk about insurance when everything works smoothly, but when problems happen, they become public quickly. This creates an emotional imbalance in public perception. The truth is that insurance can be life-changing in positive ways. But like any financial system, its effectiveness depends on fairness, transparency, and proper understanding between customers and providers. Despite its benefits, insurance faces strong criticism worldwide. One of the most common complaints is claim rejection. Customers often believe they are fully covered, only to discover policy exclusions when they file claims. These exclusions may be written clearly in documents, but many customers do not fully understand them when purchasing policies. Another major complaint is claim delays. Some customers report long waiting periods, repeated document requests, and complicated approval processes. While companies say these steps prevent fraud, customers often see them as tactics to avoid payment. Another controversial issue is policy complexity. Insurance contracts are often written using legal and technical language that average customers may not fully understand. This creates a knowledge imbalance between companies and customers. There are also accusations of mis-selling, where agents may focus more on selling policies than fully explaining limitations. Some customers claim they were promised benefits that were not actually included in policies. On the industry side, companies argue that fraud is a major problem. False claims cost companies billions globally. To prevent this, companies must carefully verify claims, which can sometimes slow processes for honest customers. This creates tension between protection and verification. The reality is that insurance operates in a higher-risk financial environment. Companies must balance paying claims with staying financially stable. But customers expect fast and fair support during their most difficult moments. This conflict between business sustainability and customer expectations is at the center of most insurance controversies. Understanding this conflict is key to understanding why insurance is both trusted and criticized at the same time. Insurance is not only a financial product, it is also psychological. People buy insurance because they fear uncertainty. Humans naturally want security and predictability. Insurance companies market policies using emotional language like protection, safety, and family security. This creates emotional trust. However, trust can be fragile. If a customer experiences a bad claim process or hears negative stories, trust can break quickly. Another psychological factor is delayed benefit. Customers pay premiums for years without seeing direct returns unless something bad happens. This can create doubt, so people begin to feel like they are paying for something they may never use. However, that is exactly how insurance works. It protects against rare but devastating events. Another trust challenge comes from complexity. When customers don't fully understand policies, they may assume coverage is broader than it actually is. When reality doesn't match expectations, disappointment turns into anger. Social media has amplified this effect. Negative claim stories spread quickly and influence public perception. Positive claim stories are less shared because they are less dramatic. Cultural and religious views also influence trust. In some regions, people question whether insurance aligns with financial or ethical beliefs. Education and transparency are key to solving these trust gaps. Customers who understand policy details are less likely to feel misled. Companies that communicate clearly build stronger long-term relationships. Ultimately, insurance trust depends on communication, fairness, and education. Without trust, even a well-designed system can fail emotionally in the eyes of customers. The insurance industry is one of the largest financial sectors in the world. It manages trillions of dollars in assets and investments. Insurance companies do not simply store premium money. They invest heavily in government bonds, infrastructure projects, real estate, and global markets. This means insurance plays a major role in global economic stability. Many large construction projects, airlines, and shipping operations cannot function without insurance backing. Without insurance, global trade would slow down dramatically. Insurance also helps governments manage disaster risks. Some countries use insurance models to handle natural disasters like floods, earthquakes, and hurricanes. This reduces the financial burden on national budgets. However, financial power also creates influence. Large insurance companies can influence regulations, financial markets, and investment trends. This creates debate about whether insurance serves customers first or financial systems first. Another global concern is accessibility. In many developing countries, large parts of the population remain uninsured due to cost, lack of awareness, or distrust. This creates inequality in financial protection. As insurance continues growing globally, balancing financial power with customer protection becomes more important. The industry's future depends on whether it can maintain profitability while also maintaining fairness and trust among customers worldwide. Technology is rapidly changing insurance. Artificial intelligence can now analyze massive data to predict risks more accurately. This allows companies to offer personalized pricing. Some experts believe this will make insurance fairer. Others worry it could make insurance more expensive for higher-risk individuals. Digital platforms are also transforming claims. Some companies now offer instant claim approvals using automation and digital verification. Mobile apps allow customers to buy policies, track claims, and access documents instantly. Blockchain technology is also being explored to create more transparent claim systems. Future insurance may become faster, more personalized, and more data-driven. However, technology also creates ethical concerns. Data privacy is a major issue. Insurance companies collecting personal health, lifestyle, and location data could create privacy risks. Another concern is fairness. If AI predicts someone is high risk, should they pay extremely high premiums? These are questions society must answer. Technology can improve efficiency, but fairness must remain a priority. The future of insurance will likely depend on balancing technology, ethics, and accessibility. Done correctly, insurance could become more transparent and customer-friendly. If done poorly, it could increase inequality and reduce trust further. So, is insurance safety or just a system? The truth is more complex than a simple answer. Insurance is a financial system designed to manage risk across large populations. When it works properly, it protects families, businesses, and economies. When it fails or feels unfair, it creates deep frustration and mistrust. Insurance is neither purely good nor purely bad. It is a tool. Like any tool, its value depends on how it is designed, regulated, and used. Customers must understand policies clearly. Companies must operate transparently and fairly. Regulators must enforce rules that protect customers while keeping companies financially stable. The biggest danger is not insurance itself, it is misunderstanding. Many problems happen because customers expect more coverage than policies actually provide. At the same time, companies must simplify communication and reduce unnecessary complexity. The future of insurance will depend on trust, technology, and education. If customers become more informed and companies become more transparent, insurance can become a stronger safety system. If not, it may continue to face criticism and suspicion. In the end, insurance is not just about money. It is about fear, security, responsibility, and trust. The final decision about insurance is personal. But one thing is certain: understanding insurance is the real protection. As we reach the end of this investigation, one thing becomes clear. Insurance is not a simple yes or no answer. It is not purely safety, and it is not purely a system designed only for profit. It is something in between. Insurance was created to protect people from financial disasters that they could never face alone. And in many cases, it still does exactly that. It helps families survive medical emergencies. It helps businesses recover after destruction. It helps societies rebuild after disasters. But at the same time, insurance is also a business. It operates on calculations, risks, profits, and financial survival. And like any large financial system, it can sometimes become complicated, difficult to understand, or emotionally distant from the people it is supposed to protect. The real power in insurance does not belong only to companies, governments, or financial institutions. The real power belongs to knowledge. When people understand what they are buying, what is covered, what is excluded, and how claims actually work, insurance becomes a stronger tool. When people buy insurance without understanding it, they are not buying protection, they are buying uncertainty. The future of insurance will likely depend on one major factor: trust. Trust built through transparency, simpler policies, faster claim processes, and honest communication. Technology may make insurance faster and smarter, but only fairness and clarity will make people believe in it again. So, is insurance safety? For many people, yes. Is it also a system? Absolutely. And maybe the truth is that it is both at the same time. The final decision about insurance will always be personal. But before making that decision, one thing matters most: understanding. Because in the end, the strongest protection is not just a policy document. The strongest protection is awareness.
Friends, this video was prepared for education and truly correcting information and knowledge. If you like this video, please follow and subscribe for our favorite comments.